In today's video, I'm going to take a look at the stock market, and there's a pattern that could be in play that I actually hadn't considered. I know in several of my last videos I had noted that this, at the time, it looked like a 4-year cycle low, but it came really early. We hadn't even covered 3 years yet. Occasionally a cycle will shrink or stretch, so it's not out of the realm of possibility that was a final 4-year cycle low. It just came a bit early, but I've kind of been operating under the assumption that we were going to retest that either this fall or early next year, but it just struck me this morning that we actually, instead of forming a kind of a rounded top, we might be in a triangle consolidation. In a triangle consolidation, you don't actually make a higher high, and that's kind of one of the bearish implications right now, is that the market wasn't able to make a higher high at this peak during this daily cycle. Did not get above this peak, and it's the same picture in the S&P. You can see here again, we didn't quite get above this peak, so we've got a lower high, but we've also got higher lows. So we're kind of making lower highs and higher lows, and that can signal that price is in a triangle consolidation, and usually those are continuation patterns. So the assumption would be that price would eventually break out of the consolidation in the same direction that it entered. In this case, of course, we came up, we're going higher. I would say if we get some kind of trade deal middle of the month, then this triangle, while it still may have to bounce one more time off of an upper trend line, and let me go back to the NASDAQ. The pattern's a little clearer there. We may have to bounce off this trend line one more time and come back down, but the assumption would be that especially if we get a trade deal, then we're going to break out of this to the upside, and then we'll get the next strong trending phase in the bull market. As most of you know, I think the last year and a half has been a sideways consolidation. And let me expand this chart just a bit. All right, so I think this has been a sideways consolidation after this very powerful move coming out of the elections. I know a lot of people, perma bears in particular, are calling this a topping process, but I think it's too early. Secular bull markets, they tend to last, at least in modern history, they tend to last upwards of 20 years as the new technology comes online and is integrated into human society. And gone over this many times in the past. I think there are world-changing discoveries and advances occurring right now in biotech, in nanotech, robotics, artificial intelligence, autonomous transportation, clean energy, just to name a few. And I don't think we've reached maturity in any of those fields yet by any means. So I don't think this is a bull market top at all, or even close. Maybe this might be a halfway point in this longer term ongoing bull market. But I think this is just we're just in a sideways consolidation. You can actually see it a little bit better in the S&P, and especially the Dow. I'll put the Dow up next, but this was just a really strong run, and we either needed to go parabolic and form a bubble, or we were going to have to go sideways for a while and allow the market to kind of catch its breath and catch up, allow some of the long-term moving averages to catch up to price. And I think I'm pretty confident that's what's happening. Here's the Dow. You can see this even better. This doesn't look like a top to me. This looks like a multi-year sideways basing phase. And this is maybe the kicker that kind of turned the light bulb on that maybe we were in a triangle here. Is the semis. If you remember, the 2000 high was at about 1360, so right in here. We reached that level back in late 2017, and we've just been churning sideways for a long time. We had to dip down into what may actually turn out to be the 4-year cycle low, and then a first attempt at a breakout, a second attempt at a breakout, and a third attempt at a sustained breakout. Let me put it that way. And this also has the look of kind of a triangle type pattern. Let's see if I can draw the trend lines in here, something along these lines. And usually triangles break on the flat side, so I guess you would have to assume that at some point here, this resistance zone at roughly 1600 is going to break, and we're going to get a sustained move higher. And I would say that, while I think it's unlikely, but I may be wrong, if we were to get a trade deal this month, or maybe an interim deal, or just some sign of progress and a little give and take on both sides, then I would have to say that we're probably going to break out of this to the upside. So something to keep in mind. I know I have been operating under the assumption that we were going to have to come back down and retest this later this year or early next, but that was before I noticed that this potential triangle pattern forming here. And so I'm going to keep an open mind that maybe this was a final multi-year cycle low, and now we're just in a sideways triangle consolidating, and ultimately it's going to break out to the upside, and we're going to start the next leg up in this secular bull market.